back. First of all, I want to start off by saying that we here at TAM are deeply saddened by what happened in Boston, and our thoughts and prayers go out to all the victims and the families involved. Clearly, it's been nothing short of an emotional week. The markets have seen some crazy volatility that we're not used to. It's been about 5 months since we've seen this, and I'm talking 3% intra-week pullbacks in the NASDAQ and the S&P. The S&P closed the week up from there, 2% down, and the NASDAQ closed at about 2.5% down. However, it still doesn't get around the fact that money's flowing out of the riskier areas of the market. We've already talked about the Russell, money flowing out of growth and into defensive names like the Dow. We're seeing more of that. We were hoping that the NASDAQ would be the next leader of this rally as investors look for opportunities to buy things off the bottom value plays because technology hasn't run yet. Well, clearly that hasn't happened this week. I'm going to illustrate that with this chart. This is what the NASDAQ has been doing until recently. This is called the ascending wedge. And what happens is price action will kind of move upwards in this kind of choppy-like area, and eventually it'll break topside of this resistance line. And what should happen is this is usually actually a very strong indication when it moves out, and you want to see that accompanied by a high buying volume. However, what happened on the NASDAQ was you saw that action, it moved out and then pulled back in below this breakout point on a high selling volume known as a false breakout. This is an indication that the NASDAQ, at least right now, isn't going to be leading this market anymore. So I talk about more things in the Weir. Go ahead and check it out, and we'll see you next week.